All right. G'day, Bobby. Can you hear me okay? We'll get started. People are slowly filter in. Okay, just make sure I've got want to get open. All right, so good to go. G'day, Bobby. All right, welcome to Trade Setup, guys. Traders, thanks for joining me. Just going to go through what happened in the overnight action. If you're based in Australia, of course. If you're based overseas, it may not be quite overnight. But the markets last night, the DAX was closed. So if anyone was looking at the DAX thing, it dropped another 330 points. I was closed as a bank holiday overnight. FTSE was down slightly. Then we got the US bounce back again. Pretty much got sold heavily to see the Dow. If anyone watched the Dow on the open, which we'll show you, we'll get up now. The Dow on the open got smacked around a bit. You can see this action here, just spike low. So that's about a 300-point drop on the open. And this is a 30-minute chart. So it opened here at 11:30 and 12 o'clock news hit. It was on services. So the key numbers at the moment are starting to show a bit of contraction. Essentially, we had manufacturing data that come out. Now, when did that come out? A couple of nights ago. Shook the market about a bit. And then we had last night some services data come out. Non-manufacturing PMI, what do you call it? And it's not, so above 50s expansion, below 50s contraction. Problem is it's gone from, say, 53 to 52 to 51. I don't know exactly what it is now. It's still around the 52 mark or so, but you can see the expansion is slowing. So it gets to the point where like manufacturing is actually contracting. It's below, it's around 48 or so. So it's if manufacturing stays sort of below 50 in the US, and then you got services kicking off and starting to tick below 50 as well, it's not a great sign. Not a great sign for the US, or at least the way I'm viewing it anyway. We're sort of expecting this, sorry, trade wars to flow on into the greater economy. And it seems with this sort of data, it is. We've got consumer spending in the US, which is basically buoying the economy at the moment. Now, if all things considered, you've got employment. I was just looking at full capacity is considered around an unemployment rate of around 4.1 to 4.7%. Now, they're at 3.7% supposedly. So, if full capacity is slightly higher, how much further, how many more jobs can they create? So what the risk is, if it's a slowing economy, there's going to be a bit of unemployment lift, you would expect. And that's not what they want, because that leads on to, if there's sort of pressure on wages, there's pressure on employment, things like that, that slows down spending, which slows down consumer spending, which affects the greater economy. So that's what markets are looking at. The thing is, last night, I mean, news come out, spiked at low, dropped about 300 points and bounced straight back again and ended up slightly, I think up about 70 or 80 points. What they're looking at now is rate cuts, potential rate cuts. So maybe the US could be forced into a rate cutting cycle. Maybe not. Maybe there's just one more. I mean, they're probably more than likely at the end of the month, you would expect, if the market continues on this downward path, they're going to cut rates. If numbers slow, especially if they're seeing sort of easing in their key numbers they're looking at, and potentially an easing in inflation from 2% to say 1.8, 1.7 or so on, below their key lower band level, then they're going to have to potentially look at cutting rates. It's how many going into the end of the year, how many times. And I think they'll stick to the same sort of scenario. They'll vote on it, potentially cut rates, and then, excuse me, potentially cut rates and then talk it up saying, we'll see what the data brings us for next month. But if they don't cut rates, because last time around, there's a fair few of the members that voted against it that didn't want a rate cut, didn't feel they needed it. They went ahead and cut rates. So if the numbers don't change dramatically, it's just the market getting creamed, then it doesn't necessarily mean they're going to cut rates. And that could really be a bit of a kick in the guts for the markets. So that's the Dow, did bounce back. I would suggest a lot of this move though, it's been belted from the last couple of sessions, got smacked down from 26.9, so 2700, about, what's that, 4,000 points, is it? Is it right? No, sorry, 1,000 points, 1,000 points. Down to these lows around 26, 1,000 points, got smacked down. You would expect that's a bit of a short covering because you don't know tonight. We're gearing up for the employment data, the major data released in the US, employment at 10:30 tonight. So if that comes out better than expected, so there's a few more jobs created, that takes the pressure off. Or if it comes out lower, it could increase the pressure. So you don't really know. I mean, there's talk that they were buying it up because of potential rate cuts. I'd suggest there's more just closing out of short positions than anything else, and people reposition themselves. You mean if you're coming into that number and you've locked in a handy gain, you'd be happy to do that. Lock in a handy gain, the market starts to bounce back up, you just get out because you don't want to come in the number fully loaded short and find out that it gaps up and you don't have a chance to get up because it can go so fast. That's the last thing you want. But you can happily re-establish your short positions if need be. So I think that's what was happening in the US. You got that's the Dow. The UK, it sort of continues to move lower. That's looking a lot weaker than a lot. And most you've got key resistance up here. Just draw that up. You've got some resistance up here. It's touched on that zone again. This is, just get rid of that. I don't want that. All right, let's expand that. So you've got this liquidity zone. Sell-off come through, pop back up, retested. Some selling continued to come in. A bit, deeper correction. It's gone all the way up. Just fell short of really pushing into that zone again and built a lower high here, even with this spike lower. So the market's pushed down now, and then we've got this another lower high coming to play, just showing that sellers are starting to come in a bit more strength than previously. So we may get this kind of move down again. We may get a move down to retest. We might test some inside levels at 68.70. We may test all the way down to lows at 65.50. So the DAX to me looks well and truly under pressure just at this, and that's a daily chart, don't forget, not a half an hour. It's under pressure at the moment. It could react higher and then hold another lower high and really start to press down. We'll wait and see what happens with there. DAX, not much to talk about the DAX because it was closed. Gold bounced as we expected. So what we're looking at, I think we posted this on TradingView. So jump on the TradingView, take a look. We originally posted a bounce from here, a bit of a setup long from here, and it did play out nicely. And then again, what we're looking for, so this is the overall action, what we're looking for around at this stage. Coming to the open of the European session, it looked buoyant in here, but you expect sort of that two moves down, there's two waves down, just coming to the European. Once the European session kicks off, let them start to buy into gold. Asian session's done their thing on gold. US hasn't opened, so it could be buoyed back into the US session, which it was. And that's on the numbers. So that big spike on gold is on the back of that data release at 12 o'clock. And then, of course, the US dollar dropped like a stone and then started to rebound, which saw sellers come back into gold and just really squeeze out a few of these longs that are built up, through, especially some of the late longs. Not so much the early longs. They're probably happy to hold it. But some of these longs potentially built on the break, maybe got squeezed out or just took some profit. It's a short-based rally for them. But for me, gold longer term can easily press up, test 15.41. What I'm looking at is this level. I think I marked that on the morning report on gold. If we get up and hold above this level, not just spike up again through it and finish below. If we finish below, you'd sort of look at that as a lower high. If we finish above with a bit of strength, this could easily, or if we push above, we might push above there tonight on the numbers. We might push above there through the European session into the US payrolls at 10:30. And if we hold above that and start to consolidate, that opens up a move to 1540, 1545, this previous highs, because you've got this major corrective move at lower as the US is starting, trying to work themselves out and things are looking a bit better. That come into place, that extension lower, take that from the next major lower high, extend it lower, took us right smack bang into it. Same sort of volatility extension lower, and it's reacted off there. So now we're trying to gauge whether we're going to get this correction, if this is going to be a lower high and press straight back down at the end of the bull run in the near term, or are we going to chop around, grind right back up, retest these highs, pull back, build a lower high, and off we go. Sorry, a higher low, and off we go again. All these things are going to come into play soon, and a lot of it, like you can't just expect. It's a lot of it's factored in on, sorry, not factored in, but depends on US numbers, US dollar, and things like that. Whether the market starts to get caned again. So if this US starts to get knocked about on the downside, you've got safe haven buyers coming in now. Safe haven buyers don't see the reason to come in. It's US dollar dependent. Does that make sense? So there's quite a few factors that will come into play, and you just really got to take it as each one starts to play out. We'll just go over, what I'll do is quickly see where the Aussie opens. So for me, this is the SPY. This big washout, so that was coming in, that was obviously when that spiked lower on the US about midnight. You see the Aussie really, sorry, the SPY really spiked lower, but then it proceeded to bounce all the way back. So I would think that's a lot of, excuse me, just 1 second. Might as well grab some coffee while I'm at it. So that there to me is more of a washout and a squeeze and really just a capitulation, bit of profit taken down there or on the bounce back. So this pullback here is potentially a bit of a squeeze on these sellers that built up yesterday. So really where it finished overnight, so early hours of this morning, was pretty much about the same level it finished yesterday. So even though the market was down 150 points yesterday on the ASX, the SPY sort of back to where it started, because I think we're before the open or prior to the open yesterday, we were expecting the ASX to be down about 120, an extra 20 or so points was really this sort of move lower on the SPY, and it's bounced straight back again. So what I'll be looking for here is there's another bit of a push lower, and it gives these shorts a chance to close out during the day if they've closed out, or potentially to establish a long position. I don't know why you would be into the US payroll numbers. I think the bias at the moment is down, and the market's a bit tentative right now. I wouldn't be jumping into any long positions, longer term long positions. They've got to be well and truly beaten down. If you're looking at shares, I wouldn't be buying too much on the rise at the moment because something that's actually been trending for a while. There's something to be said about trending. Obviously, stick with the trend, but when things are well and truly extended, and if, say, the US gets hammered tonight, and we've got all weekend to think about it, something that's been trended has got a lot of fuel built up long that's going to want to get out, and it could easily gap down on Monday morning if you have a negative night in the US. But if you're looking to buy something, because we think this, excuse me, we think this US is going to be supported tonight, you want to be buying something that's consolidating lows rather than got a lot of, because the move hasn't played out. Now, if the US gets caned tonight, we got the weekend to think about it again. We gap down on Monday. If you're buying something sort of around support levels, or at least it's already had a lot of heat come out, you could probably weather the storm a lot better. So that's my views. I'm a bit tentative to start loading into long, especially now, especially if you think this overall market. I mean, the way it got crucified there is not so good at all. And you can see it on the overall index. A couple of days have been really savage. So we're probably going to get a bounce. You're always going to get bargain hunters starting to jump in. It's just whether or not that's enough, because to me, that's once we go 1 day down, okay, fair enough. That could be a lower high and could turn around and squeeze straight back up again. But the secondary day down, that to me, it's because we come into this bid zone here, or this zone of previous lows, that's a confirmed lower high. And a confirmed lower high generally means they're attacking these lows, they're going to push through it. Because what the market's done is tried to go up, it's gone up, had a pullback, okay, that's fine. The secondary time it tries to go up and it can't, and sellers start coming in at a lower level. Anyone that didn't get out through, any of these buyers that sort of weathered this and it's come back up and they think they're doing quite well, this market's going on forever. So they get that secondary move lower and they didn't get out the first move, then that could be the trigger for them to start exiting. And then really of this move up, you start working your way back of traders, buyers that want to get out as the pressure starts coming on. First and foremost, you got the ones late into the trend. They get squeezed out first, then it moves back, then these guys get squeezed out, and then so on. So that's the way we're viewing the market, and that's why you get these lower highs come into play, and they start to really put the pressure on the low side, on the downside. Otherwise, look, we'll just have to wait and see. We'll see what the SPY's doing. So the SPY for me, this open, if it was going to wash out those highs, wash out this high, 65.06, it could just keep going. I mean, to me, a washout and then a pullback into it is more negative, especially on the open, because what it's trying to do is clear the way. It's clearing out some of the sellers, and then buyers will see that break and go, okay, we're in. And they'll be trying to buy on these pullbacks, yet the market could be setting up for a move lower. But the fact that it's sort of opening lower, it could just grind down because it gives sellers confidence to re-establish or new sellers to come in because it's holding below that 65.06 zone, for instance. So that's what it's bringing some sellers into the market. And if it started to hold a lower level, bang, they're all fuel to get squeezed back out for that to extend up and through 65.06. So that's just what I'm viewing. And I think it also holding below a level when sellers come in, it gives anyone that's, the bigger boys or the bigger sellers have got a bigger position that have ridden it down. They can't just get out in one foul swoop. They might have to edge out of the market. And I'd rather edge out when the market's still under a bit of pressure than, spike through a level and then having to chase the market back up and really minimize those gains. Does that make sense? So that's what I'll be looking at on the SPY. So I just want to see how this plays out. Haven't traded it. I didn't trade it yesterday, but I'll show you what I marked up and just run through those a bit before we get into it. Where am I? Here we go. Let's get the 5 minutes. So what the date yesterday was the 3rd. So this is just what I was viewing. So the 30-minute chart, you can see the 30-minute MAs are down. Okay, we'll probably see that here. I know. We'll get it up. Don't worry about that. 30 minutes, I'm looking at the MACD was above the zero line. So when you go above, I'm considering that as a buy, sell below, and you're looking at market structure. But that's sort of a bit of an indicator, gives you a bias of momentum. But it's on the upside. The bias is not, the market's not necessarily in a sell mode, or it's starting to find a bit of pressure from the buyers, whether they're buying on the way down. But either way, the pressure's starting to shift. It's not so much sellers are piling in and there's no one left, there's no one really willing to buy it from them. So there's a lack of liquidity and the market can really get a run on to the downside when you see the momentum sort of on the upside, say on the MACD and momentum above zero. It means that there is liquidity coming in. They don't have to go and hit the offer and push it up. They might just sit there because they know the market's negative. They're still sitting there positioning themselves or easing out of a short. But either way, that liquidity is coming in on the buy side. So that's what I'm looking for. So you can see the market's opened, open negative, popped back up, and then started to head south, especially after a big, couple of negative nights. You expect that sort of price action. So what you'd be looking for is just that high low. So essentially, you've got 1, 2 moves down, and then we've got a high low starting to form, and you know that there's enough. It's broken through another level. It's dragging some more sellers, and there's enough fuel just to see if we can get a bounce. And then once you get this moment to start to tick on the upside, really that high low is a good little entry. It didn't kick on too much. You probably got about 5 to 10 points, somewhere around that, out of that move. This is just a 5-minute chart. This one here, I don't like that too much because it's too volatile. Having your stop, the way I trade it is a break at the top, stop of below that candle, which is essentially this red candle, but you've already had a couple of red, green. So it is an inside higher level. I mean, it's a justified long. Maybe you go down to a lower time frame, but I didn't see just my style jumping into that too much, and especially after this original move up. So you've essentially got, this is your first move, so you're looking for this low to a high through here, somewhere right up here, which it eventually did. It did do that, but I think that was starting to ask, because this is more of an extreme level than, back to the mean of the 20. So what this is becoming in the short term is more of the known rather than the unknown here. Does that make sense? So yeah, that kicked off okay. You might have taken a few points out of that if but your risk was quite high. Whereas this one's tighter risk. You can see a small red candle, broke to the upside, risk below, and then you probably got about 5, 6, 7 points out of that as well. This one here was on the reverse. You can see the momentum starting to roll down again. But the problem with that, even though I played it quite nice, the 30 MA was actually up. The momentum was still on the upside, so it was conflicting views. Tradable, obviously in hindsight, tradable. And you've got this sort of chop around here, it spiked through that little washout high, push down, lower high, essentially lower high, break there, big risk. If you did take it, fine. If you just took the break there with a risk of 5 or 6 points for your intraday, fine. It still played out okay. And you're looking for sort of shorts to start jumping in again, or anyone that missed this move, because that's quite a negative move. They haven't got out of portfolios, or there's going to be, that there's going to be people that are going to be concerned. The world's ending, everything's caving in, they're going to sell, and that it's probably going to cap onto the upside at least. So that's why buying in this one, or maybe this one's a little bit late into that move. But yeah, it's ticked off, bounced up. You had probably another opportunity which didn't really go anywhere, and that was about it for me. I thought that's what I'm I'm doing every day is just marking that up. And see where the ASX is. We're expecting that to open up about 30 or so, 30, 35, I think. We're up 22 at the moment, so it's going to be some bargain huntings today, but I wouldn't think it'd get out of hand considering we're coming to the weekend. So for me, it means the shorting's been done or the selling's been done, I would suspect, the last couple of days. If you're not squeezed out, you're probably going to hold it after today. So really the buying I'd expect is people just sort of jumping in, nibbling, bottom feeders, trying to find a bargain. And I think, look, maybe it'll work out okay. Who knows? I just don't like to do that coming to a key number tonight. I'd rather be waiting on Monday because if your time frame's quite short, yeah, you might get out by the end of the day. Intraday positions, but if you've got a longer time frame, it's going to be tough. All right, that's probably about it, guys. I think I'll just want to take a quick look at the Aussie. Some more potentially if you're trading some currencies. This is the Aussie here. We're looking for that. You can see haven't got it marked up here. We're looking for that press down, looking for another retest. Probably not quite as low as what it did, but a retest of the lows and then a bit of a squeeze on the shorts that built up after the RBA announcement. It did play out quite well. We're back up to 67.45. So I think the market's sort of just going to settle down until later on tonight. You can see the momentum's easing. So there is potential for this extend up towards 67.80. But we'll just keep an eye on it. I think it's going to be US dollar based and what happens. So the market's probably going to be chopping around, I would suggest, coming into the US session tonight. A lot of time to go before that, so it can do anything. It is heading up at the moment, but I wouldn't be surprised if this sort of squeezes down a bit more. We'll see. That's the Aussie. Euro is really the dynamics from when we were looking at it a while ago. It's changed, moved down, broken that level. So I think we spoke about it yesterday. It was about here. Did pop down and it's continued straight up and through. So it's holding higher lows. But this move up is really just a contraction of that key move down. So don't be fooled that we're starting a new trend. Just be careful. But I think if you're going to be positioned anywhere, maybe long at the moment, although this is quite late. So if you're a Fibonacci is from high to low, it's probably getting on about that 50% mark, somewhere up here. 50% retracement. So yeah, just bear that in mind. Euro, pound we're looking at as a long in here. It did tick off. It was probably harder to entry. You probably have to, this is a 30-minute chart, might have been a tougher entry, but you can see what I've marked up here. This moved down in sort of we're just looking for this bid zone to potentially hold. And you can see it kept pushing into it, rejecting, pushing in, rejecting. And this third time, we're looking for a higher low to start to play out, which it did nicely because that's really showing you that anyone selling in here, there was some buyers that rejected off that level and closing out of shorts and new initiation of longs. And then it sort of happened again at a slightly higher level, which showing you that, okay, that's going to change the dynamics from anyone that's holding position short the second time around is going to be thinking, oh, maybe I should be locking in some profits. And anyone that didn't get in this first bounce is going to be thinking, maybe I should be in this long. So that sort of changes the dynamics when it starts to fail at a level. And then, of course, you get that quite a decent move back up again. And then this next move down, you can see the dynamics clearly changing. The sellers are trying to give it a nudge, and you can see the momentum's down. It's swung down. This swung down to the lows from overbought to oversold, but it was holding up. Okay, so holding up, suggesting that there's still some selling. Selling is easing off. Buys are starting to flow in, looking for a bit of a move up, and that's why we're looking for that long in here. It's kicked off nicely, come straight back down, but it's kicked off a where it was being capped at 123.35. It was being capped there for a while. You can see 1, 2, 3, 4. Even just the later stages was getting capped. It blasted through that, pull back. So now it's just really to see where it chops around a bit and starts to lift off from higher lows, which would mean that move up, extend that. We're taking this somewhere up to 125. But we'll just keep an eye on that. But that's what we'll be looking for in the pound, and that's probably about it. We'll steer clear. We'll just have a quick look at the US yen. 25 minutes. All right, I can yabber on easy. This move down, we're looking to capture that on the short side way up here, which turned out well. It's extended. Anyone can see just this. It's extended the previous lows here, blasted through. But if you go back, there's probably more of a bid zone or a liquidity zone. So I don't necessarily mark that up as a key level because I'm looking for keys in the way of stops. Where are stops going to be placed? Whereas this is just traded, popped up here, sold off from there, retested that zone. It was quite a broad zone, pulled back higher low, found some more selling, smashed out again. But it was always roughly within this zone. Again here, took another run and it went straight through, come back in to test it, and then took off. Down towards that zone again, we're just popping back into that zone again. So whether it can find some liquidity, and this is the low put in place, and that was really a blowout low too, don't forget. Well, looking at that on the 30-minute chart, a bit of a blowout low, whether it chops around here, it could just continue straight through, which is fine. It might push through, pop back up, find more liquidity, and sellers just continue that move down, or whether it starts to build at higher low, and push up off this zone. Yet to see just yet. But if you're going to initiate shorts, you want a shoulder, a lower high, see where the short goes to, and get ready to take it off. If it goes straight through, you're fine. Then just try to follow the bigger trend. If not, try to potentially look into reverse and get off that higher low, or a key sort of higher, something like this. We're getting something like this. It's pressed down, retest, it fails, get a higher low, and then bang, just like we talked about on the pound. All right, we'll probably finish it about there. Just see where the ASX is up 21 points. All right, it's not quite as strong as what we thought. Let's just see what this SPY does. It's got some work to do. Go the 5-minute. And just see what it plays out. But I wouldn't be surprised if we have more of a mundane day today, purely because of the numbers. I wouldn't expect funds and big boys starting to jump in left, right, and centre because we sold off. I think they wait for, because of the longer term outlook, they'll be waiting a bit more, see what the payrolls does, because if the payrolls comes out expecting 140,000, if it comes out 100, God, you can just expect this market could really start to head south because jobs are coming down. Expect, just that flow on we discussed previously. All right, guys, have a great day and have a good weekend. Good luck today, and just keep an eye on, I guess, what comes out tonight, and think about it over the weekend, and we'll discuss it again on Monday. All right, guys, have a great day. Speak to you soon. Bye.